One of the things that I think helps is if you go to the May CPI report, core inflation was 0.13% month over month. The goods component was in deflation, which is affected by tariffs. And then if you look at core, the two biggest contributors were housing and auto insurance. That was 0.14. So outside of housing and auto insurance, we had deflation in the May CPI report. I don't think tariffs are going to cause housing prices to go up, nor is it going to cause auto insurance. So to me, the Fed is, I think, shifting to looking at expected tariffs, but not realizing the real driver of inflation. 75% of inflation since 2019 was housing and auto insurance. Those are both actually starting to cool.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Tom Lee breaks down the latest market outlook, stocks, crypto, and what's next. Stick around to catch his sharp insights.
I think if we looked at the Fed's framework that they've repeated in statements over the last 8 meetings about data dependence, then they should have cut, or they should be cutting in July. So I think this last meeting seemed to have changed the guidepost from data dependence to forward-looking expectations around tariff inflation that I think is why markets are starting to question the Fed's rationale. And Professor Siegel points it out, long-term inflation expectations are lower today for 1 year forward than they were in December. So we've gone through a full tariff liberation day and expected inflation's lower. Yields are actually lower. I think the market is moving ahead of the Fed and saying the Fed should be cutting sooner.
So at what point is the market going to get, Tom, too upset by the pace that appears to be slower than it would like?
Well, there could be an accident, right? Because I think what we are ignoring is housing is choking and collapsing under the weight of higher interest rates. And the labor market isn't as strong as it appears. I mean, when we look at the ability to get a job, it's much harder. So as Professor Siegel says, there's long and variable lags. There could be an accident where the Fed will have to panic. So I think that's something we have to watch in the incoming data.
When you say accident, what do you mean? On a long end of the curve, like rates go up too much? What do you mean?
No, I think that there could be a point where the Fed suddenly realizes the risks are actually to the downside for the economy weakening. And so the Fed will actually have to respond to an economy that they're strangulating and really fighting what they believe is a supply shock inflation. So I'm a little concerned that the Fed could be late if they continue. Yeah. I mean, I broadly agree. I might add that I think interest-sensitive groups are going to benefit because they're going to start to look forward and realize the Fed, if they are a little slower this year, they're going to be more dovish next year. That's good for financials. It is good for the industrials, really good for Bitcoin and small caps as well.
Bitcoin just slipped from $106,000 to around $103,400, dropping over 2% in the past 24 hours. But Michael Saylor, known for his bold Bitcoin takes, isn't rattled. Instead, he took to X with one of his signature tweets, this time a Matrix-themed post. Using an AI-generated image of himself styled like a scene from the classic sci-fi film, Saylor claimed that tickets to escape the Matrix are priced in Bitcoin. It's a symbolic message that reflects his long-standing belief. Bitcoin is a path to financial freedom. While Bitcoin slid more than 4% since Monday's high of $108,850, Saylor remains firmly bullish. Interestingly, he's not just talking big holders are acting. On-chain data from Santiment shows that large Bitcoin wallets holding 10 BTC or more are quietly increasing. Over the past 10 days, 231 new large wallets have appeared. Meanwhile, smaller wallets, those with less than 10 BTC, are selling, with over 37,000 of them exiting the market in the same period. This divergence in behavior paints a familiar picture. Smart money is buying while retail traders panic. Saylor's Matrix metaphor might feel dramatic, but in times of volatility, It's often these moments that shake the next big move. And if history holds, accumulation now could fuel Bitcoin's next rally.
I do. I mean, I think companies have proven many times over the last 5 years that they are incredibly resilient and adaptive. This is really the fifth shock that they've absorbed. I do think one of the consequences of sort of surviving COVID and fastest hikes in history and now this tariff shock is that investors are going to start to assign higher multiples to the companies that are succeeding. So I do think PE expansion is a theme we should think about the next 12 months.
Adds to the uncertainty, the Fed's roadmap and the Middle East, you throw that into the mix too. We're not really sure what's going to happen there. What's your best idea now in light of all that?
Best idea is still AI. AI has run, but it's still, if you're looking 12, 24, 36 months out, it's still that AI trade. This is not like the late 90s. The player's not like the late 90s. The opportunity's not like the late 90s. This has legs. The AI diffusion, the Mitigation of AI Diffusion Act has given it legs, and we will continue to see AI. That is the U.S. secular robust trade. That is the trade that you need to be in if you're not in already.
Tom, you guys sound like you're sharing research, all suggesting that the Fed, I think the professor already said as much, that the Fed should cut rates in July. Harvey, you first. This sounds like yes.
So what the Fed has said, and which I agree with, the Fed's saying, hey, the economy's still strong. We still have time to take a wait-and-see approach. It's in our best interest to do that. And I don't think they're going to move in July. I don't think they should move in July, but I do think later this year.
Move in July.
No, I think they can take their time. I think they can take another meeting or so, let the data come in, convince themselves of what they need to convince them of, and then we'll normalize later in the year. And then we can all just move forward.
So, Tom, you agree with that? I mean, you agree that Waller might be jumping the gun here with calls for July?
Bitcoin and altcoins are getting a fresh wave of bullish energy after a surprise statement from Federal Reserve Governor Christopher Waller. In a move that caught many by surprise, Waller suggested the Fed could begin cutting interest rates as early as July. He pointed to signs of a slowing economy and downplayed the long-term inflationary impact of recent tariffs. According to him, interest rates are currently 1.25% to 1.5% above the neutral level, and there's room to lower them while keeping inflation in check. His comments came shortly after the Fed chose to keep interest rates steady between 4.25% and 4.5%, while signaling 2 potential cuts later this year. Adding more intrigue, Donald Trump has been pushing the Fed to cut rates by a full percentage point, referencing Europe's aggressive rate-slashing approach. If the Fed begins easing, history suggests a rally in Bitcoin. Ethereum, Solana, and Cardano could follow. Digital assets soared the last time the Fed cut rates, particularly during the COBA-driven stimulus era. Wall Street seems to be preparing. Early spot Bitcoin ETF saw $389 million in inflows just on Wednesday, with Ethereum ETF also pulling in big money. As supply on exchanges drops and institutional interest rises, the stage could be set for crypto to break out once again. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.